Assalamualaikum warahmatullahi wabarakatuh. Today our group consists of me, Muhamad, Asrul, Azwan bin Arbaain, and my friends Muhammad Qayyum bin Halil and Muhammad Hidayat Izzuddin bin Jamil will be presenting about the Islamic Exchange Traded Funds or i-ETF. In this video, we will covering about the background of Islamic Exchange Traded Fund, the functions and the benefits of the Islamic Exchange Traded Fund. We will also discuss about a case study related to Islamic Exchange Traded Fund, the structure of Islamic Exchange Traded Fund, and the comparison between Islamic and conventional exchange traded fund. As the beginning, I will cover about the introduction and the background of Islamic Exchange Traded Funds. First of all, what is Exchange Traded Funds or ETF? Exchange Traded Funds or ETF is a unit trust that listed and traded on a stock exchange. The ETF are bought and sold based on their price at day ends. An ETF hold assets such as a stock, bond, currencies or commodities such as gold bars, with an arbitrage mechanism designed to keep its trading close to its net asset value. For Islamic Exchange Traded Fund or i-ETF, it shares the same characteristic with the conventional exchange traded fund, except the Islamic Exchange Traded Funds only track an Islamic benchmark index, where the index comprises companies which are Shariah compliant with the Shariah principle, which is the companies that are not in line with Shariah principle are prohibited as part of our investment. Next, we will discuss about the establishment of Islamic Exchange Traded Funds. Before that, we need to go back at the beginning of the introduction of Exchange Traded Fund in the world. The Exchange Traded Funds were first introduced in the United States of America in 1993 by the State Street Global Advisor to track the S&P 500 index. It's marked the beginning of exchange traded fund, and it's evolved from time to time. Throughout years, there is a demand for a Sharia compliant exchange traded fund has increased among Muslim investors, and finally on February 2006, the Dow Jones Islamic Market or DJIM Turkey Exchange Traded Funds was listed on Istanbul Stock Exchange to track the performance of DJIM Turkey's index, and it's become the first Sharia compliant exchange traded funds. In Malaysia, My ETF DJIM Malaysia Titans 25 or My ETF was established in January 2008. This establishment provided the global asset managers and investors with a unique vehicle for attaining a desirable portfolio exposure to a new asset class in Asia. Next is the benefit of investing in Islamic Exchange Traded Fund. The first benefit is it's enable the investor to have a privilege sources from the companies listed under the index without investing in each of the stock owned by the companies directly. The fund yield investors to have entered to the variety of stock offered by the companies with different weightage accordingly. The second benefits is the fund are maintained as a Sharia compliant investment to adhere to the Sharia principle and practices. It is also as a recognition for the non-Muslim investor who prefer to invest in such fund for profitable earnings, safely invested fund, and secure research platform. The third benefit is the funds transacted are priced during the trading hours on the stock exchange. The constituent stock of the index are promulgated on the funds or the website of the services provider. As a result, it will be easier for the investor to access the information for investment to make an investment decision. And the fourth benefit is the fund have a lower annual management fees compared with other units trust products. This is because the Islamic exchange traded funds are being bought and sold at the transaction cost as those charged for the trading shares on the stock exchange.
Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Muhamad Qayyum Halil, and for this video, I will explain to you about the structure and the case study for Islamic exchange trade funds. Basically, the structure of Islamic exchange trade funds, it contains around 6 participants. So the first one is the investor. The investor is the person who invests in ETF units. The second participant is the stock exchange. When investors want to invest in ETF, who do they find? They will find the broker from the stock exchange. And the broker will help investor in the term of selling and purchase ETF units at the market price at the stock exchange during regular trading hour. Moving on to the third participant is liquidity provider. Liquidity provider is the body who aid in providing liquidity to the ETF. The fourth participant is the participating dealers. Participating dealers' main role is to perform and facilitate in-kind creation and redemption of ETF units. It can also act as a liquidity provider to facilitate the trading of ETF units on the stock exchange. The fourth participant is Islamic ETF. Islamic ETF can be differentiated into two participants. So the first participant is a manager. Manager is the person who manages or administers the ETF in line with the trustee and security laws, while the trustee acts as a custodian of an ETF assets. It also ensures ETF is administered in line with the trust deed and security laws. The last participant is the Shariah advisor. The main role of Shariah advisor is to advise on Shariah matters to the Islamic ETF. Let's continue with the case study. For this case study, we have chosen the TradePlus Shariah Gold Tracker, which is managed by the Affin Wang Asset Management Berhad, or known as AHAM. The category of fund is Sharia Compliant Community Exchange Trade Fund, and the type of fund is Gold Price Performance Tracking Fund. The gold price performance will be referred to the LBMA gold price as a benchmark. LBMA is a London Bullion Market Association. So, based on our research, we found out that the Trade Plus Shariah Gold Tracker is Sharia compliance after being reviewed and audited by Amani Advisor Sendirian Berhad on the structure and mechanism of the funds. The TradePlus Shariah Gold Tracker has been approved by Amani Advisor Sendirian Berhad because the units of ETF purchased by the investor represent an equivalent amount of physical gold. Secondly, all gold owned by the fund will be held and kept in the safe custody in Singapore under the authority of the trustee. The third reason is the transaction of the gold is carried out in cash and on the spot basis because it involves with the recovered item. The fourth reason is the unit holder are entitled to redeem the units by the way of in-kind redemption, means that the unit holder can redeem the gold bar. Last but not least, the goal itself offering refuge in times of uncertainty. For example, the price of gold is steadily climbed during the coronavirus outbreak.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Muhamad dari Izzuddin bin Jamil, and for my part, I will explain about the differences between Islamic ETF and conventional ETF. For first differences is about the i-ETF only tracks the only Sharia compliant index, while the conventional ETF tracks any daily index. This means that the i-ETF only focus on the investment that is constituent with the Sharia compliance, while the conventional ETF include any investment that is contains like a riba, interest or gamblings, and that is very not suitable or being forbidden by the by the Sharia. Okay, secondly is about the i-ETF only holds Sharia compliant securities as approved by the Sharia advisor at the company level and regulatory level, while the conventional ETF only holds securities included in the securities or stock universe of the index and of the manager. So this means that when we want to know about whether the investment is follow the Sharia rule or not, the Sharia committee will filter the investment first by using the one metric, which is Islamic non-compliant. Islamic non-compliant is calculated as the percentage of a portfolio market value exposed to companies that are non-compliant according to Sharia investment principles. Non-compliant companies are those with ownership of prohibited business activity or total revenues greater than or equal to 5% from prohibited business activities, with financial greater than or equal to 33.33%. So the business that prohibited activities include adult entertainment, alcohol, cinemas, conventional financial service, gambling, music, pork, tobacco, and weapons. So based on the list, we should know that it is very forbid in the Sharia about all those matters. Okay, thirdly is about the synthetic securities. The i-ETF does not allow the using of synthetic securities, while the conventional ETF allow the using of the synthetic securities. So what is synthetic securities? Synthetic securities is the financial instrument that are engineered to simulate other instrument while altering key characteristics. This means that the investment mimicking other kind of metal or any commodities, and by following the Sharia, to undergoing any business or any investment, the commodities must be real and cannot be being created by only an imagination. So it is very important about so this is will involve the guaranteeing into the investment. And lastly is about the governance. So i-ETF is governed under the Sharia governance, while the conventional ETF does not govern under Sharia governance. This is because to avoid any issues that is being prohibited by the Sharia being involved into the Islamic exchange traded fund. And for the conventional ETF, we already know that this ETF, this investment can contain anything they are desire, by not following any rules of this Sharia. Okay, for conclusion, the Islamic ETF is a securities that have a guarantee from anything that is prohibited from Sharia. Muslims need to be aware of the investment product and to have knowledge of the form of transactions in order to prevent any misunderstanding as they choose to be interested in the investment fund. The developing Sharia finance need active support from the government in the form of supportive policies and adequate incentive for the accelerated growth of the Sharia compliant stock market. So that's all from us. Thank you.